Welcome to the TMT Stock Market Strategy video for Friday, April 22nd. Did get a push to the downside yesterday. Google reports, this is the bigger news, Google reported last night and missed, and they very rarely miss. Earnings have been horrendous, and I've mentioned that last week before we started earnings season, that earnings are not going to be great, and I do believe that's where the market will top at one point. Now, where does the market go from here? No one knows, but you have to use extreme caution. We're at elevated levels. All of our indicators, momentum oscillators, are pointing lower. We're at extreme. Sentiment is at extreme. Everybody is long. How much longer can the longs continue to push this market up? Well, we're not going to just go out and blindly just short the market, right? We need a sell trigger, and that's how we're going to continue to do this. Otherwise, if the market breaks higher, well, we'll look to buy pullbacks, and that's what we've been doing. So just use caution out there. Keep your head in the game. This is risk off happens extremely, extremely fast. And we had a little bit of taste of that a couple days in a row where we sold off a little bit, and then we just kind of reverted back to the upside. So I do believe that the markets are in a topping phase, and I do believe that it will be in the next few weeks where we'll get a market top here. There's nothing good to be up here at these markets, at these elevated areas, and at these price earnings ratios. They're just too expensive. The markets are fairly valued. We have a deep discount. There's value in Europe. You can buy the DAX, the Nikkei, and the French CAC. You can't. There's no reason to own equities here at these levels. So until we get a pullback, and until we can reset what's happening, and especially with Google, one of the biggest market caps aside from Apple. You have to be careful. There's a lot of fund managers. One of the top 10 most popular stock owned by mutual funds and hedge funds. Okay, so when something doesn't go right, as you know, they'll start selling, and we'll see what happens. Unless something came good out of the conference call, I believe that's going to be a good catalyst and help the markets go lower. Now, I also pointed out a couple days ago. Here's the UUP, the dollar ETF. We had a nice big bullish fallen wedge coming out of this pattern. This is bullish. We have some nice volume here, and that's what you need when you're breaking out. The dollar is up nicely today, and dollar yen is up as well. So it's something here that you got to pay attention to. Give you guys long commodities. The whole commodity sector is up based on, if you want to call it fear, or if you want to just call the dollar breakdown. So be careful out here, because if the dollar catches a little bit of momentum and really starts to pop, you're going to get that all those long trades in gold and silver and copper and all the grains and soft commodities. They're all going to start to sell off and get that one big push that we're looking for, which I am still looking for, a big push lower. And then I do think the precious metal sector will be is starting a bull market, a long-term bull market. So something like that we'd like to buy, but you don't want to buy up in here in these areas. Okay. All right. So now we got the UUP. Here's the VIX. It's also telling me use caution here. I had this little bullish fallen wedge drawn out, but if I just open this up a little bit more, you could see that we're kind of like in a downtrend channel. And let's see if we break out of this downtrend channel. We are coming into some big support here, all right, and we are at the low. So that's something to me also says you have to use caution here, okay, guys, when you're trading VIX, or when you're trading the market for that matter. This is the ETF for the VXX. I like looking at it because it's clean. Excuse me. All right, let's go into the indexes. Back here at these all-time highs, as you can see, we've seen this chart many times. A lot of supply up in here, okay. Now we are, as you can see, if you looked at the price action here, we really have gone nowhere, right? Pretty much all of April. We had sideways consolidation, a one-day pop, and now we're basically sideways consolidation again. So one-day pop out of all of April pretty much solidifies what the month was. Kind of boring. But I do believe that we're ready to go, and I think this market is ready to move forward. It doesn't matter which direction. I think the path of least resistance is down first. The bigger move is down, but it doesn't mean that we can't get everybody long one more time, break back above it, make new all-time highs, and then that would be it, and sell off again. Because remember, guys, what's the fundamental reason? What's the technical view here? There isn't any. It's exhausted itself. So to me, that's why I'm using extreme caution here when you're dealing with these markets on a case-by-case basis. All right, Diamonds Daily, again, did fantastic, broke above 18,000, came back down below it, and as you can see here, we're continually rising into this uptrend channel, if you will. And let's see what happens here until this market breaks. It's got to give us some sort of direction here, guys. Okay, we don't want to just go blindly, just go out and do something here if there's nothing to do. All right, transport's our leader here. You could see back below the long-term downtrend line, and you could even call this a double top. Absolutely, you have your neckline right up in here, and you could see here clearly. Here's your neckline, and that's the break of that neckline to see some further price action going to the downside. And when that does happen, of course, I will put some downside targets. But at the moment, we're just kind of stagnant up in this area. No reason to do so until we get some price movement to the downside. IWM, you can see here, again, that back below. This is one of our secondary leader, but it's lagging, and it's been lagging since 2014, as we all know. It's going to need to really start to pick up some steam here. But you can see heavy resistance up above. I mean, you got this area here, then you got this area up above here. So there's a lot of resistance that price needs to really start to kind of break back up, backing and filling in order for it to really move and explode and help the markets. Okay. Lastly is the Qs. Again, Qs should be hit because of Google. And as you can see here in the Qs, we've gone nowhere. We've done nothing but sideways price action here to here, and then of course we had that 1-day pop, and then we're sideways yet again. So something's got to give here, guys, and when it does, be ready for it. Don't keep getting stopped out of your trades. Let the market come to you. It will come to you, believe me. Soon something happens, and you can jump in on it with a fresh mind, and that's when you capitulate on the markets, where the markets will capitulate itself, and you will take that ride down and make some big money. All right, so don't force anything here. Remember, it is Friday, so get your trades in, try to get your day in early, and then call it a day in the afternoon. Have a great day. Enjoy the weekend, and we will speak to you on Monday. Take care.